Actually, yes. Being in the vault, and I would say it's a bit akin to, if you look at a beautiful car on the TV and it's there it is, and you kind of look at it and yeah, it's nice. You go into the showroom, it's a whole different story. It's real, it's there. Oh, suddenly it's kind of attractive, So, and I think being in this vault, it really does provide a perfect example. You're in a physical environment. And as you say, I was in our state-of-the-art Kinesis vault on Monday, our silver vault, that is, and we moved into our gold vaults, which we'll talk about at some other time. But really, we're talking about silver here in particular, because silver provides a much better example of how counterintuitive this market is. And while we were there, we just happened to film about 25 tons of 4/9 wholesale 1,000-ounce physical silver bars coming into our Kinesis silver vaults to back your silver currency. Now, the filming of literally tons of incoming pallets of wholesale 4/9 bars being processed and vaulted. We're going to release this in I believe, our upcoming 50th episode, which is coming pretty quick, amazingly. But do you know what? This actually may be the first time some of you will have ever seen a 4/9 wholesale bar versus a 3/9 silver wholesale bar. And let me tell you, that little bit of excellence that we strive for to make to bring in as many 4/9 wholesale bars as possible, they're just beautiful. I mean, when you look at a 3/9 bar, it's lovely. A 4/9 bar is beautiful. Now, really, I've got to say thanks to all of you there's just some of what we just saw was just some of the hundreds of tons of supply you are helping to remove from the market. Now, we always knew that silver has always been the house insider's Achilles heel. Yet they can play gold a lot easier than they can play silver. And the reason is because while gold has traded at around 100 ounces of paper transactions for every single ounce of underpinning it, silver has been closer to 500 to 1. And that's 500 times as many paper claims against each ounce of silver. So by you buying silver last week alone, just that 25 tons we filmed, together, what we've done is neutralize close to 12,500 tons of paper silver, guys. I mean, that is huge. Now, what I'm saying to we as stackers, by taking physical off the market, are using the power of physical against the house rig game. Now, given just what we physically vaulted for you on Monday equals 12,000 odd tons of paper silver, and that is, think about this, that's how much silver is cleared and netted out on the books of the insider banks on a daily basis. When you think of these things and you realize just how big and heavy these bars are, and how when these are not leveraged bars, these are fully allocated real bars, and you suddenly realize that we, as stalwart stackers, whether we're buying an ounce or a ton, we've got the power of inverse leverage to win this long game. And in fact, just to illustrate just how counterintuitive this recent paper silver sell-off and gold, of course, has been, but silver, we have been in fierce competition against the same insiders who have tricked the house punters into selling their positions. We've been in competition with these guys to secure physical wholesale bars from the global refinery. So, give you a bit of an insight as to what's really gone. It's so much so, yesterday, one of the largest refineries we deal with advised us, hey, sorry, we've only got 70 tons of wholesale bars left to sell for the rest of the year. Now, okay, this is one refinery. This is having a knock-on effect into the supply chain. And there's only one answer. If you keep swapping your paper for physical, the price will have to rise until someone is happy to sell it to you. Hey, it's called supply demand. Amazing that we've not seen that for 50 years in silver or gold under the COMEX rigged game. But under the radar, while paper traders are literally psychological operations, psyoped out of their undeliverable positions, hey, good riddance, guys. Physical silver is actually experiencing off the scale physical demand. And given this tsunami of massive paper to physical divergence, silver is going to rebound strongly from an actionable, arbitrable, deeply oversold level. So in other words, look, this time, the next rally is going to be triggered by short covering.
Andy, it reminds me when you're talking about silver again, you can take 200 ounces, let's call it $5,200, $5,200 US dollars, and drop it on the floor. You can even throw it on the floor and not much is going to happen. But you take 200 ounces or 200 or two 100 ounce bars and you just drop it, you could break your foot with that weight. It's just amazing the difference there. Now,